So I'm sitting down with LSCRE, and we just want to hear a little bit about how you guys came together as partners and what's going on in the market and overall what your business prospects are looking right now, because I've been following you guys for a long time. I really enjoy what you've been doing. I've known you for a while, then you introduced me to the rest of the group here. So this is Sam Morris and Rob Beardsley. Am I saying that right? Beardsley?
Yeah, absolutely.
Okay.
Yeah, and I'd love to share more, Maria. So
Yeah.
I'm Rob Beardsley, the founder and CEO of LSCRE. We're a multifamily sponsor with about 6,000 units that we own and operate in Texas. We've acquired nearly $1 billion in assets in partnership with our investors. And we actually recently joined forces with Sam here, which he can talk about his background, formerly the founder and CEO of Sunset Capital. So we merged forces in 2025 and have been doing great things ever since.
Yeah. And Sam, I know you've had a great background in finance and banking and the real estate world, and so you brought a lot of expertise to this group as well. But what made you do this shift where you guys paired up and
Yeah, no, it was a pretty autonomous thing, I would say, for at least for me and my background and what we had, and what Rob had actually already started building too was just something was a lot more scale. And so it enabled me to kind of narrow my focus into the things that I was really good at, and being a former banker and things of that nature, understanding underwriting and getting to do things, being involved with our investor relations and our asset management side of the team and the acquisitions part of the team, and married that all together where we already have scale, and we're actually over 200 plus employees in the great state of Texas, and getting to be home and operate assets in my own backyard. It was actually very seamless and simple to do.
Nice. Well, speaking of your background, can you give us a little bit more?
Sure.
On the actual background, because I know it, but to share with everyone.
So before I got into real estate full time, I was a corporate banker, and so I had the ability to get to underwrite and lend well in excess of $1 billion on these types of deals. And when you underwrite deals all day, every day, in your young 20s, you become a master underwriter fairly quickly. And so getting the ability to actually see how these deals worked, who operated them well, what they did, what worked well, what didn't work well, it enabled me to get a little push. And so in my young 20s, I was able to start investing into these larger multifamily deals. And really it was from that point on, I was hooked. And so I've done this now for a couple decades, and it's just been a great thing to be involved in the multifamily world.
Awesome. Rob, back to you. So I got the pleasure of coming and seeing you guys' office there in New York. Very nice setup there, beautiful view over the harbor, and seeing the Statue of Liberty and everything. It's very impressive, the whole office and the company, and everyone I met was so professional and everything. But I gotta say, the first time I met you, I was a little surprised. I'm like, he's so young and so professional at this age. Like, how did you get to that? And that's an absolute compliment, by the way. But how did you get to that position so soon? Like, what was your path? Can you give us a little bit about your background?
Absolutely. So I've been blessed in many ways to arrive at where we are today, starting with really the way I grew up. So I grew up in a fantastic family. My parents have a background in real estate on the brokerage side, on the development side, back in California. And so growing up in Silicon Valley, I had kind of a mix of exposures. For my family, it was an exposure of entrepreneurial, business ventures, and then also the tech side of Silicon Valley. So that drew me to actually go to Carnegie Mellon to study information systems, which is a blend of business and technology. But ultimately, I circled back to my family's craft of real estate. And so once I got the real estate bug, there was really nothing stopping me. I was fortunate enough to meet my business partner. We started the company together, and that's what really allowed me, kind of with the help of my family's background as well as with working with my business partner, to really get a very early start. We started the company when I was just barely 21, so had all the ambition in the world, but obviously lacking the gray hair and the experience. So I fought really hard to actually acquire those things that I didn't have by way of working with partners who had the experience, who had the expertise, and slowly but surely we've been able to build this firm into what it is today, where it's, this is not a startup, this is not a one-man show by any means. I don't want to, be the one guy at the table, right? We have amazing, competent people in their respective fields across accounting, HR, operations, acquisitions, investor relations, asset management. And that's really what I'm passionate about. Passionate about building people and systems that are gestalt, meaning they're bigger than the individuals.
Yeah. And you guys are fully integrated at all levels of multifamily?
Yes. So we started the company back in 2018, and then in 2022, we actually vertically integrated. And that means we brought property management in-house, and that allowed us to have more control over our assets and really be in control of our destiny in terms of scale. And a big thing that I think is not as talked about is the construction side of things. It's common once you hit a certain scale of portfolio size to bring operations in-house for various reasons. It could be for risk mitigation, control, it could be for profit, but the construction side is really where I think you can make or break things, because especially when you're dealing with workforce housing assets, which our portfolio is a blend of Class C properties all the way to Class A, and in order to operate those properties successfully, you really have to have that in-house construction capability. So going back all the way to, as my dad would say, I was at construction sites in diapers. Having that in-house construction expertise where we know what we're doing when it comes to roofs, when it comes to electrical, plumbing, HVAC, that allows us to do a couple things. One, we can operate more efficiently than the general market, which is obviously a great benefit for investors. But number two, it also gives us the confidence to wade into complexity. We can actually bid and buy a deal that maybe some other buyers shy away from because they see the complexity or just the headache associated with roof replacements or the uncertainty of cost. But because we can do the due diligence and have the in-house expertise, we have the confidence to actually go and take that and make it into a successful investment.
Awesome. And where do you see the company going? Like, is there a 5-year vision? Is there any changes happening?
Well, you know, from the standpoint of the quality of the assets that we've been able to acquire, and particularly I would say over the last 12 months or so, and really where that's going, we really haven't changed too much of the philosophy, I would say, in the last 12 months from the standpoint of we still want to buy the higher quality assets in great locations, right? And what that does is it enables us to try to pretty much level up the company, because if you're buying those better quality assets in those good locations, it's almost a self-fulfilling prophecy, because property management, more people want to work in those types of assets. It's easier to own and operate those types of assets. Investors like seeing them, and they provides greater consistency for the returns that we're providing the investors. And so it's a lot of doing the same of what we've done over the last 12, 24 months or so. And I can continually seeing that continue to grow while being able to recycle some of the equity from some of the legacy deals to give us the ability to continue to buy those better quality assets in those better areas.
Well, and I know in your underwriting, you also study the markets, really, digging deep on those. So what are you seeing the market trends are right now, and what should investors be looking for?
Yeah, so we're specifically in the state of Texas right now, and really I would say for probably the remainder of this year would still be the case. And so we really get down into the granular of things. And so, I was talking to Brad just a week ago, and he found a deal that he really wanted to talk about. He liked where it was at, and it checked all the boxes from that perspective. But and this is kind of the benefit of having boots on the ground. I said, yeah, but man, the property right next door, there was a shooting and a teenager died. Did you know about that? And he was like, oh, something did pull up. I said, yeah, I go, you really just want to be about 2.5 miles over from where this is at. I go, yeah, we like the area, but not that particular area. And so having the boots on the ground locally really does matter, because there's definitely a right side of the track, wrong side of the track. And being so ingrained in the communities of where we're at, it enables us to have that knowledge.
And that Texas market is still going strong.
It is, yeah. For Houston or Dallas, they're either number one or number two in almost every major KPI metric that we look at too. So things like job growth, population growth, in-migration growth. Those are these are the areas where people want to live, and so we like being in those areas where it's desirable and has growth to it.
And Rob, if you can finish this off, if investors are trying to choose a sponsor to go with, because I'm all about go with the sponsor more so than the asset or anything else, why would they want to go with you guys over somebody else? What sets you apart?
Well, I think there's definitely a few things that set us apart. One that comes to mind is our transparency. So we work very hard to keep our investors informed with monthly updates, quarterly reporting. And it really actually goes before that. It goes from the original deal presentation, the way that we underwrite deals and present them to investors, the way that we provide a full data room. There's no thing proprietary. There's nothing behind closed doors. If people want to see our models or our source data, we're happy to share all that sort of thing. So I think that really builds trust with investors because we are providing more than just a financial product. We are in the business of helping investors sleep well at night, and we know that it takes a whole lot more than just generate a good return to do that, because I've heard of unfortunate stories of investors participating in a deal that perhaps went well, all things considered, but the communication was so poor that the investors left with a bad taste in their mouth, not wanting to do it again. And so that's not something we ever want to have happen, right? We want to have great results and even better bedside manner. So I think that's one thing. I think we really truly do embody best-in-class investor relations, transparency, communication. Another thing that we bring to the table from an operational perspective, and Sam touched on this quite a bit, is just our focus. We say no a whole lot more than yes. We're looking at just a handful of markets, and then within those markets, we're really only a yes to a very select few submarkets. So we spend our time saying no to a whole lot and then going deep on the real possibilities. And that goes from an acquisition perspective, but then also that helps from an operational perspective, because we have a cluster portfolio. We own, 4,000 units just in Houston. So we're not taking our management teams and putting them on planes all over the place. People are at the properties. They are involved in the day-to-day operation, and you can really only do that if you are a geographic and asset class specialist. So we're saying no to development, we're saying no to retail, industrial, we're saying no to anything outside of Texas at the moment, and I think that's a real, it doesn't guarantee success, but it really gives us a leg up over someone who is more of a generalist.
And speaking of guaranteed success, can you just touch real quickly on your track record?
Yeah, absolutely. So we've acquired 24 properties up to this point. We've had 2 exits for an average annual return of about 30%. And we currently have in our portfolio only, I think, 3 floating rate loans and only 1 bridge loan. So we really prioritize consistency, certainty. So we emphasize fixed rate debt, ideally with long term, so 5-year, 7-year, in some cases even 10-year term loans. And I think that's been a winning strategy for us to be able to provide monthly distributions for investors.
Terrific. Well, thank you guys so much. Appreciate your time and for speaking with me.
Absolutely.
Yeah, thank you very much.
Thank you.